Hello and welcome to Rupee Rakshak's weekly market updates. I have with me our experts Mohan and Sumant to break down the top news that can impact your finances and investments. So let's start with how stock markets moved this week. Sumant, could you just run us through the charts?
Sure, Vijesh. So let me share my screen with you. This week, how has market performed? So if we look at the Nifty performance, this week Nifty is down by 2.5% negative. Bank Nifty is down by 1.13%, which is the least. So the Bank Nifty has outperformed the other major indices. Mid cap is I think beaten down quite a lot. It's almost 5.56% down this week. And small cap is also 6% down this week. So yes, I mean not as much as Nifty, Bank Nifty, but mid cap and small cap has been really punished this week. And it has been, of course, happening from last 4-5 months, and as far as we can see the data, I think this is the longest 5 months of fall that we have observed since inception of Nifty, since I think 1997. The market has fallen more than this, but that was in a quick succession. But this time the pain has been slow and very long standing. So I think that is probably bothering a lot of people. But I think we are slowly getting to a level where I think people should start thinking about pulling all their guns and start planning their investments in a staggered manner. Not, of course, the people should not jump in and put all their investment into the market, which is risky always. So I would recommend that they can start buying the market.
So do you see that it is bottomed out markets?
So if we look at the levels, from last 3 weeks I have been talking about the level 22,000. So there was a reason for me to say that. So now that we are just 200 points away from 22,000 level. So if you look at the daily chart in Nifty, so we are almost close to election day's low. Which was almost around 21,500 level. So that is one major factor. And if we look at the last major swing lows and the all-time high. So if we look at the volume profile, or what we call market profile, those who are into technical analysis probably they'll know a little bit about it. So if we draw the lines between these two levels, it is exactly, if you see, the point of control is at 22,000 level. So that means on a daily level, that was the 22,000 was the price which was traded maximum since since October 23. And that the post-election rally was not probably that euphoria. I think it was mostly driven by the retail, and that value was probably not justified. And we know FIIs are going out. I mean, they're pulling money out of Indian market. So they feel that the Indian market is too expensive for them. And that is the only major reasons we see market is falling, and there is no other major events that can trigger this sell-off. Of course, the tariff is of course playing its role. So looks like it has a serious impact not only in Indian market but across the globe. If you see today itself, all over Asia, there is a brutal sell-off today. So if you see, the 22,000 is a value area, and there is a gap of 400 to 500 points until election day's low. So a lot of demand was there, because if you remember, there was a huge sell-off with an anticipation when the results were about to declared, and when the NDA government was kind of not achieving the targeted minimum numbers, there was a panic, and market was selling off on that day. But as the numbers went up and people got confidence about NDA winning, so there was a huge buyback and huge supply came in at that level. So the difference of that 400-500 points, so which is the between 22,000 and 21,600 or 21,500, let's say, because 21,500 is a psychological number. So I feel that will be the zone when you can see more. You can see more and more buying happening, and probably that will be the best time to start buying the market. Anyway, we were almost close to 20% from that all-time high. So I think at any point of time, if you get that kind of a correction in a bull market, I mean there is no reason to stay away from market. And people who are actually continuing systematic investment even during this period, they will be really beneficial once probably market is back to its all-time high. Who knows by Diwali? So that is my my fingers is crossed.
And if you have more money, you should actually invest. If you don't have money, it's still okay. Don't look at your reports, but don't fall into the trap of agenda-driven media podcasts and big people coming and telling. And don't go by anybody's stature.
Yes. So avoid speculations, don't pull out your money, and keep invested. That's the suggestion from us.